Oh, so hi guys. So I just wanted to quickly share my outlook for the week. Quite a few pairs as compared to what I had on watch last week, with just 6 pairs on watch for me for this week, and one new pair, which is wheat, something that I really trade. So quickly just starting off with the DXY. How did last week close? So I don't really need this. Yeah, there we go. So how did last week close? Last week closed extremely bearish, where we basically negated all of this weekly bullish sentiment that was starting to kick in, having tapped an area of significance to the left. And if you actually look further to the left, you can clearly see that we had a small piece of volume accumulation on the weekly that was positioned just above the weekly inflection area. And why is that piece of volume significant? If you look left and consider this as a value on weekly high, this small volume accumulation over here on the weekly warranted that next leg having broken above that area into that area. So there is significance at that area. And at the moment, we are positioned to potentially just follow through with that weekly momentum and tap into that area where we could potentially reverse or stall again. So on the weekly, I am quite bearish at the moment on this. Dropping down to the daily, we can clearly see that having tapped the back end of that or those lows to the left, we have followed through to the downside. And on the 4 hour, we have approached an area where there was quite some buy pressure coming to the market. If we see this as more of the running channel over there that broke up to the upside, this is basically where this is basically the base of the channel. So this is where price could basically come close to before we then get a large volume consolidation to warrant the break of that area to come all the way down into this area, or we could reverse or rather retrace to the upside even for the short term, seek more liquidity, then come back into that area. So just by understanding that, we do understand where we're positioned and how to position ourselves on this as well. So there are two ways that I'm looking for this to actually go. The market will show us its hand where first we have this area over here, with that being just a pullback in price that basically came to retest the back end of that area. So price could basically just push into this area with a clear structure, form a clear structure at that area that will be enough to break through this area and to tap that low over there. Alternatively, given that we are approaching the base of this running channel to the left, we could basically pull back ever so deeply, tap into that area where we get that as more of an expanding with more of an expanding field to push down in continuation, and then we end up playing that to the downside. So we could basically look to also capitalize on the short-term dollar weakness on the dollar cross pairs on something like pound dollar, euro dollar, where pound dollar is actually positioned way better. But all in all, I actually don't really have other dollar cross pairs on watch apart from dollar yen, which is more on the loser watch side. So I'll just quickly start off with my top six, rather top five. So I'll just hide that. And on the daily, I really like the daily close on Euro Aussie, where we are just looking to play this small range over here that I'll just box off. That small range, I'm looking to capitalize on that, where we had this pullback in price that was potentially retesting the back end of all of this volume consolidated at the just to the left, and we sold off. And look how we came back into that area with a clear phase one, phase two, and continuation into that area to tap into that area. Really nice price progression at that area. Look at how the daily also closed. We stalled approaching that area, and look at the daily close on that really beautifully bearish candle. So I am short at the moment on this. Now On the 4 hour, what can we clearly see? We can clearly see the sentiment is short. We can see that we had a lot of volume accumulating over here as we approached that area, which was basically what warranted that aggressive sell off to the downside. We're basically trading beneath where all that volume accumulation started, and we have a clear run down into this area and down into that area, even just 90% of this run to the upside. That is what we're looking to capitalize on. So dropping down to the hourly to see where to position ourselves. You can clearly see that we are positioned above that area, which is really nice. And just through that area over here on the 15, you can clearly see that there was some volume accumulation or other continuation structure that formed at that area, which is more of a two-touch continuation over there. So I'm not really worried about anything on that. The main area of concern for me, or rather the main area that I'm interested in, is this small area just beneath it. So on the hourly, it looks as more of just a stolen price. So if we do get price basically just form a three-touch continuation structure over here, as such, I will look to enter that with a risk entry. As such, even with a 10 to 12 pip stop, say we take that with a 12 pip stop, which would be more than enough. Down to this area, we have around 8.5% to work with. And the main reason I'm targeting that area as my first area of take profit, if we go on and go on to hit 90% of that trade, of that range to the upside, well, well and good. But the main reason I'm targeting this area is if we look left at how price started pushing to the upside, we did break above that area. Then we had a small continuation clear on the hourly from where we pushed further to the upside before then evolving and forming this continuation structure as the phase two of that run to the upside. So if that is to also happen on this, I do expect price to form a smaller continuation structure, having broken beneath that, even just down into this area where we could then start seeing price form something larger to accumulate enough volume to warrant that large also phase one, phase two, phase three, and mimic the price action to the left. So that's all I have on watch on Euro Aussie. Next up, I do have a sister pair, which is Euro Kiwi. Nothing that different with regard to what I'm looking at on Euro Kiwi, and I'll just keep this as simple as possible. The only con about this is the fact that we are moving from a large continuation structure into another large continuation structure. You can clearly see that as the first we sold off, we accumulated some volume there from where we sold off, came back into that area, left a gap, and that gap has already been filled. You can clearly see that. So even if we just mark that area on, we've broken to the downside, broken beneath that area as well. So we can clearly see the sentiment ease to the downside. And at the moment, we're also trading beneath that area, so a really, really nice area of protection for our stop loss. So dropping down to the 15, there could be an argument where this could basically just form a continuation structure at that area, which I will not negate. But given the size of this impulse to the downside and that not being really proportionate to that, I won't really, if I do end up taking this, which I doubt I will not really wait for this to be the move that plays out all the way to the downside, because we do have this area just beneath it to the left. So I would actually just cap it at that area, or rather be really, really aggressive with my management as we approach that area. But at the moment, how I'm looking to take this is I'm looking at this small accumulation just above as my main area of interest, where if you get price, just push up into that area with this type of price action, which is a structure into that area. As in, that is what I'm looking to play to take that to the downside, because the pullback in this, the retracement in this, the amount of volume that will be formed or rather accumulated in that small pullback over there is actually proportionate to that, and for that to actually play the 90% role, or rather to play 90% of that range to the down to the left that we're looking to capitalize on. So that's all I'm looking for new Kiwi for Ozian. Ozian. So I'll just hide all of this again. So on the daily, I really like the daily close on Ozian. You can clearly see that we have been pushing to the upside, and having approached this area. We did tap into more of a range over here. If I'm to just mark on that area as well, we tapped into more of a range, rather more of a zone at that area, and we had our pullback. So looking at the JP25 as well, we have pulled back into an area of significance where we could basically complete that pullback and continue to the upside. And given the daily candle that just closed on this, I am seeing that as more of a possibility. Even if this starts impulsively and then correctively, where we then go on to form this, well, you can still capitalize on that even in the short term, or rather in the short run. So dropping down to the 4 hour, something that also makes me see this as more along is the fact that you're moving from a correction into another potential correction where it will still drop off. But looking at how the 4 hour candle closed, which is really, really bullish, I'm looking to see if we get a clear 1 hour continuation structure over there, or we get a follow through on the 4 hour and then a 15-minute continuation for me to capitalize on that. So dropping down to the hourly, something also really, really nice with how price approaches that area is the fact that you can clearly see a potential expanding structure over here, which is more of an expanding wedge for me, if I could call it that, where you have a first touch, you have a second touch, and a third touch, and that as a complete middle section to that structure. So at the moment, we've pushed to the upside, and if we do get a 1 hour continuation structure over here, just like that, I will basically entertain that to the upside with a risk entry and targeting this area even just for the short term. So a really, really nice positioning on that. The next player I have on watch is Aussie Card. I do like Aussie Card just because of where we're positioned. So if we just try and understand the positioning of this, we did tap into an area of significance to the left, push to the upside, and we can clearly see that we are forming continuation structures with this as one bit of continuation structure on its own, and this as the second bit of continuation structure on its own. I just don't like the fact that we are moving from a correction into another correction, but this all just looks as a clear phase one, phase two, phase three, with that as the phase one, this being the phase three, the phase two, with two continuation structures, and we could basically continue to the upside. So I do like the positioning of this. Just something to also note is that this being a structure on its own, I'm more aware, I'm more concerned with this area over here than that. So zooming in, we've tapped into that area, having filled that gap as well, and approaching that area with more of a channel. We can clearly see that we have a high that I'm looking for price to break from continuation, then for that to happen, or rather for price to follow through on that. So dropping down to the hourly, what I'm just looking for on this is for price to follow through impulsively with a 4 hour candle. And then if we get price just pull back into that area, retest the back end of that, I will basically look to entertain that to the upside, even if it's just up into this area where we could get another larger continuation to follow through. But yeah, really, really nice positioning on Aussie card. The last player that I have on major watch for the week is Wheat. I really, really like the positioning of Wick. So Wheat. So starting off on the daily, you can clearly see that. I'll just hide all of this. There you go. So we have tapped daily low, rather weekly low to the left, tapped into it, and we've pushed to the upside. I really, really like how we also approached that area with a really, really nice structural approach into it, and a clear phase one, phase two, and phase three. So really, really nice price progression into that area. Also, if you look left, we have that area over there that price broke above, and we're just trading above it, potentially accumulating volume on the lower time frames to run that next leg to the upside. So dropping down to the 4 hour, what can we clearly just see? On the 4 hour, we have retested the back end of that, and look at that for a 4 hour close. Really, really nice wash-up candle, and I like the bullish close on that. The only negative to this is this being visible on the 4 hour. This will just basically act as more of our second touch, or rather first touch, where we push up, get a second confirmed base, come back into that area to then go. And now this becomes the structure that goes, which I won't be shocked by. So management is called to be aggressive on this. So if I just flip my chart on this, what you can clearly see is, even just look at the price progression. Impulse, we have a first correction, we have another impulse, a second correction, we have another impulse, and now we're getting another correction. So even the sequence on this is really, really beautiful. So just to be concise and accurate on this, if I just draw that on, that is the structure that I'm looking to play. I'm not really bothered taking that as a risk entry, because this will just keep just trickling. We don't know where it will land. But if price does follow through on that, and then I get a 15-minute clear correction over there, I will definitely take that, even just down into this area, or just take it and be really aggressive as we start approaching these areas, because from this area price could basically just be what, come back to the upside for one last move, and then this becomes the structure, which wouldn't really shock me, and that goes, it actually does make sense in relation to the larger push to the upside. So that is all I'm looking for on wheat. And the next two pairs that I have on watch are actually a really, really loose watch, which are short. So for QEN, I'm still looking for QEN to complete its potential pullback, having pushed to the upside rather so aggressively, or maybe it could even be pivoting. So for a number of them, these are actually hedge plays. So if I just mark that area on and that, you can clearly see that to the left you had quite a large structure over there, and from this area we formed that, and we formed that, two corrections at relatively close, and having broken that area we haven't really responded to the downside. And so we could basically just, price could basically just be looking for more liquidity before we go. So just to be, to have some precision in that, I am looking for this bit of price to pull back into that area before we then look for that last run into that area. And if I am to also just check the JP225, for whatever it's looking to do, is for the GP225, we could have also completed the pullback as discussed on OCN, or alternatively, we could just have pivoted and keep selling off. So, if so, and I am to mark that area on, you can clearly see why price could basically just move to the upside, even just for the short run. So, if we get price moving to this area, and then we're looking for that next leg to that side, then it does make sense for us to look to take where like QEN. Same thing applies to dollar yen, where I'm also looking for a pullback to then continue to that side. So if that happens on the GP225, and it also ends up happening on this, then we look to capitalize on those just as illustrated. So yeah, those are the only pairs that I have on watch, guys. I have filtered out quite a number of them just because I don't really like where they're positioned, or they don't really make sense to me for this coming week. And yeah, I'll just look to trade the price action that comes this week the best way I can, into the best of my ability and experience. And at the end of the week, assess my outlook for today as the start of the week, and whatever the market will have basically shown us, or rather shown me. So, guys, that's all I have on watch. Cheers.